Hey everybody, how you doing? It's your buddy Uncle Bruce here. Stock Markets with Bruce. Today's date is Tuesday, March the 5th, 2024. Very interesting day here. It is right now about 1 o'clock Eastern Time. And we still have a little bit of time to go before the markets close, another 3 hours or so. And I thought I would try to explain to you what happened today on this company right here, Sofi. They came out with a major announcement today, and it's having a profound impact on the shares, and it's going to have it is going to be very good for shareholders. Actually, this is the headline that came out here. I'll just put myself down here. The headline is SoFi Technologies Incorporated announces a proposed convertible senior note offering that is due in 2029. And on the surface, you look at that and go, "Oh, okay, they're raising some money." Normally, when a government does this, they announce a proposed offering. They are usually paying off old debt and creating new debt. In the case of SoFi, what they're doing here is they're buying back old debt that they have, and any additional proceeds they're bringing in, they're just going to add it to their corporate balance sheet. But this deal has a bit of a twist to it, and there's a whole lot more to this deal than meets the eye. First of all, let me show you the shares of SoFi for the last week or so. Let me pop this little chart up here. Don't mind me. Again, I'll pop down here. You can see here that SoFi, if you start on the left side of the chart, and on the bottom there, you'll see it says Wednesday, Thursday, Friday, Monday. Well, last week, Wednesday, Thursday, Friday, and Monday, the shares weren't going under $9 a piece. They were trading around this $9 neighborhood, just slightly under, just slightly over. But they were flatlining right across until basically yesterday, when they began to slip a little and ended up at $8.58 a share. Now, if you look at follow my finger here, right above me here, right up there, you'll notice the number 858. That's last night's closing trade on SoFi, and that number might become extremely important here. Going forward today, the shares have traded down to 741 or so. Let me just give you a chart for today, or at least as of almost a few minutes ago. This is 746 last trade. You can see the stock in that 8 level this morning, and then in the 775 to 8, and then 750 to 775. And here we are now, kind of flat line just under 750. And I have a suspicion this 750 price may become important. It may not. I can't say for sure. All right, so there we are at the moment. The volume, by the way, is approaching 100 million shares. Above my finger here, you can see volume was 93 million a little while ago. It's approaching 100 million now. Typical volume is 51.5 million. See that right here, just above my hand here. Last 65 days, 51 million volume. For the last 52 weeks, the stock has had a low price of $4.45 and a high price of $11.70. So you can see the range of the stock. And we're just under the halfway mark if you count 746 as a closing price today, which may or may not happen. All right. A couple of things I need you to understand here. The company has has existing outstanding debt that is in play with this announcement. So let me put that up for you. I'll show you this little chart here right across from my head. So let me kind of go back here again. So here is what I've done here, pardon me, is I have taken out a snippet of the financials for the company. And you'll note that on the very top line, it says preferred stock carrying value, and then it says 2.4, 3.1, 320 million, and going across. The very last line on the far end of this chart, 320.37 million, that is as of, I believe, last year. And this is going back from 23, 22, and 2021. The company had $320 million of preferred stock outstanding. The line below that, it says redeemable preferred stock. That's the same stock. Prior to that, they were a private corporation, and they only had $3 billion in outstanding stock, and 2.4 the year before that. But for the last 3 years now, 320 million of preferred stock. This stock that is out there is costing them money. It's 12.5% yield. They have to pay, here we go, preferred dividends. Those last 3 years, again on the far right, $40,430,000 in interest payments. So the company has been paying interest of $40,430,000 the last year against this $320 million balance of 12.5% preferred shares. The move that they're making now by doing this move right here, bringing out new convertible senior notes, the game plan is to basically convert the debt that they have on those preferreds and get them converted into this. But this isn't the end of the story, and so now I have to give you kind of a bigger picture here, and you're going to have to bear with me on this because this is a bit complicated. But what Sofi is doing now is what Uber did back in November of 2023, just 5 months ago. Uber at that time came up with a financing where they were going to issue 1.3 billion in stock or in debt, and they ended up issuing 1.7 billion in convertible debt. And they added a cap call transaction to this deal. And a cap call transaction, just for you folks who don't know what this means and you're new to me, I've been talking about this kind of a structured deal now for probably 2 months. A cap call transaction simply means a public company issues debt and then turns around and offers a conversion from debt into stock under certain circumstances. And rather than issuing stock from the treasury to convert the debt into stock, they basically are trying to acquire the right to get their hands on stock that's already out there and use that stock to convert the debt into stock. And the way they do it is they institute what's called a cap call transaction. And all that is the public company, the outfit that is issuing this debt, they are buying a call option from the underwriter that is underwriting this arrangement. The underwriter, New York brokerage firms, they are helping the company raise money. In the case of Uber, they helped them raise $1.7 billion in cash. The brokers went to their institutional clients and cobblestoned together enough clients to put together $1.7 billion, which was basically less than they could have gotten. They could have gotten $3 billion, but they stopped it at 1.7. And the investors, these institutional investors, were told, look, you're going to get very little in interest, maybe 1% in interest on this money, but your debt, this money you're putting up, can be converted into Uber stock. At the time, Uber was trading on $42 a share, between 40 and 45, around 42. And the deal came out at about $74 a share, so that Uber would be able to swap the debt, 1.7 million, for $74 stock if the shares were to trade at 92, 93 or higher for at least 30 days. Stock had never been there before. This was an offer that the stock had never been to 94 before. But the brokerage community were saying to the clients, look, you're going to get about 1% interest right now on your money. You're just parking it here. And between now and several years from now, the shares, if they go up in price, you can be put into the shares instead of this debt, which means that you'd get the stock at 72 if it's trading at 94. So you'd be up $22 a share. Rather than make 1% interest on your money, you're making a fortune. You're making 30% more on your money just at the 94 level. And it could go higher than that. Now, the investment community, the institution said, I'm in. And that deal got done. But at the same time that Uber did that deal, they also got a call option given to them. They bought a call option from their broker that allowed them to acquire stock at the $74 level. In effect, they are going to buy stock at $74 and give it to the investors, these institutional investors, by way of a call option. And the call option went up to, I think it was a $74 option with the high, it would trigger out at about $140 a share, $130 odd dollars a share. So if Uber shares went up over 90 and beyond, the company could now create this conversion at their leisure if they wish to. And the higher the shares go beyond the 90s and then into this 130 level, the company is making money on this call option. And what's happening is Uber could equal a profit higher than 1.7 billion. And in effect, they turn around, exercise the option from the profit of their option, and deliver the stock to their investors, their debt holders. Now, the brokerage firm that did this deal is basically saying, okay, we'll help you raise the money and we'll offer you a call option. And what we'll do is we'll buy up stock on the open market because it's $42 a share. And we'll buy up a bunch of paper because we just got a bunch of dough from you for this call option we just sold you. And they were buying up the paper under $72 a share. They bought up all kinds of paper under $72 a share because the brokerage firm needs 1.7 billion in stock valued at $72 a share upon exercise of said option. And so they scooped up stock under $50 a share, under 60, under 70. They bought it up to where it is now. It's now as high as 79, $80 a share. Their average cost of all the stock they're buying and buying and buying and buying will be 1.7 billion or less. And they have a buyer for it all, the public company itself, with their call option. And so at the end of the day, what's going to happen at Uber is the shares are going to break through $90 a share. They'll break beyond that. The Wall Street community has embraced Uber as a favorite stock of theirs, and all kinds of positive press is coming out on Uber all the time. All kinds of analysts working for brokerage firms are miraculously recommending Uber. Who would have thought? And up goes the stock to all-time highs, $82 just yesterday. Today it's a little lower because the markets are lower, but this is temporary. We're going higher. Count on it. Now, Uber is delivering results. Okay, so it's not like the company doesn't make money. But the good news for Uber is that they were able to knock off a $1 billion deal. They had a note that they were paying interest on. They got rid of it, and it was costing them $70 million a year in interest. They don't pay $70 million a year in interest anymore. They pay 1% interest on this $1.7 billion, and that's going to be converted into stock, which means no interest will be paid on any of that cash. That means Uber is making $70 million a year more profit by not paying $70 million in interest to anybody. It's an amazing deal, and it's complicated, but it's working out and it's well underway. Now, Sofi, here we go today. Sofi shares were $8.58 last night. That was the closing price. Usually the way these deals work is you add 30% to the closing price of the stock on the day that you announce the deal, or day before you announce the deal, excuse me. And as best as I can calculate it, I'm coming up with $11.15 to convert the debt into stock. That's the deal that Sofi has. Sofi has a call option from their broker. They'll be able to buy the stock at $11.15. But I believe the maximum price of that option could be as high as $17 or higher dollars per share. And it could well be that Sofi can acquire more stock than they need to close this deal out. Because what's likely to happen is similar to what's happened with Uber. Uber announced a $1.3 billion financing deal. They upped it to $1.7 billion. Sofi has announced a $750 million deal plus an option to get it to 860 odd. And I think they're going to up it, and it could come out at 1 billion plus. And that means we may have a scenario here where Sofi and the brokers are going to need to buy 100 million shares of Sofi stock on the open market. And at the moment, we are at $7.45 a share. Now, you're asking yourself, why is the stock down, Bruce, from $8.58 where it closed last night and $9 where it was held all last week? Why is the stock allowed to be down here? And the reason I'm speculating this is that it's possible that what's going on is the company announced this morning the intent to do this deal. Here's the announcement again. We want to do a proposed convertible senior note offering. Okay. My hunch is that tonight at the bell, wherever the stock closes at, will be the number we use for conversion possibilities. So if we close at $7.50 a share, just let's pretend it closes there. Add 30% to that number for the conversion. Well, 30% of 750 is what? 3 times 7.5, 225 more, 975 a share. So it could be that the 750 value, it turns out to be a 975 conversion. But in order for the conversion to take place, the stock's going to have to trade at 30% more than that. And that is going to add not quite $3 a share to that number. I'm going to guess it's going to take us to about $12.60 a share ballpark. You guys with the calculators out there can figure it out yourself. So now $12.60 is the magical price that the stock has got to get to in order for this deal to be converted into paper. I have a suspicion that the cap call transaction, that call option that Sofi now is getting, is going to max out at $15 a share. Because if the stock closes at $7.50, double that price to $15. That's the maximum the call can go to. And anything over $15, Sofi makes no extra money. So if the shares reach $15 a share, Sofi has maxed out the profit on their call option. That max profit on the call option will cover the entire cost of the entire deal they're doing today. It's kind of complicated, but it isn't. It's an amazing little sleight of hand. What actually is happening here is that there are 900 million shares out there of Sofi that can trade hands right now. Anybody can trade them. 100 million of those shares, in my opinion, are going to be taken off the market, and it could be 110 million shares coming off the market. And those shares are going to be in the broker's hands, which will then transfer to the company's hands as the shares rise up in value. And those shares will be transferred to the institutional investors that are buying this bought deal, because it's going to be a bought, oversubscribed deal. And Sofi will still have 900 million shares trading, free trading, but 100 million of them will be in long-term hands that are in no hurry to sell this stock. They're going to put this in their pension funds, mutual funds, ETFs. They're going to be gone for 10 years because by the time these institutions get the paper, the company is trading in this $14, $15 neighborhood or higher, and they are in no hurry to take a profit from a 975 deal. They're gonna look at this company and go, "Here, you're rolling, you're making even more money. No need to sell this stock in any hurry whatsoever." Keep in mind that because Sofi is knocking off this preferred debt share, these preferred shares, they're saving $40 million in interest right now. They're going to start saving that starting tomorrow, and or let's say next week when the deal officially closes up. It's a $40 million a year cut in expenses for Sofi, which means they don't have to make $40 million to pay the interest. They make $40 million, it's all profit. None goes to interest payments. So this actually is adding profitability to Sofi. It's about 4 cents a share per year, ballpark. It's a smart move. The other thing to remember is if Sofi were to announce a stock buyback today, they would be limited to only 5% of all the shares outstanding that they've got. And they would have to use cash that they have on hand to do the stock buyback. They don't have the cash on hand to do that. They don't want to buy stock on hand with cash they have on hand. They want to increase their loan portfolios. And so the maximum they could buy right now is about 47 million shares a year. It's 5% of all the outstanding stock. This deal right here could take 110 million shares of floating stock off the street. It's still free floating stock, but it's not tradable. On top of everything else, when it's all said and done, there are, as of right now, according to the stats, as of the 15th of February, just 20 days ago, 158 million shares are short on Sofi. Now, there were 900 million shares free trading and 158 million shorted. What's going to happen in the next few weeks and months? There will only be 800 million shares actually out there because 100 million are going to be taken off the street, tucked away with the broker. And there's only 800 million free trading with 158 million shorted against it. In other words, the shorters have just been caught with their hand in the cookie jar. They are in trouble. And at the moment, nobody is saying a word about this because the company can't speak. They're in a blackout period. They're not allowed to talk right now. There's a financing being done. The broker can't talk because they can't spill the beans on everything. Analysts are still trying to figure this deal out. And the public has a rare opportunity to try to buy this stock right now at 742, 743 a share while they're down here. Maybe up to 750 by the bell, perhaps. Once this deal is closed, in other words, Sofi comes out and says, hey, we're way oversubscribed. We've decided to up the offering. we're going to go with 900 million and let the broker get 150 million more. Going to do 1.15 billion, blah, blah, blah. Once all that is done, then the gloves are off with regards to the shares. The shares are just going to trade wherever they're going to trade. And I believe the shorters are going to go, whoops, we got to cover ourselves. But there are now two buyers for the stock instead of one buyer for the stock. As of yesterday, the only buyer that had any urgency to buy this paper were the shorters. They were the only ones who had to buy this stock back. They're short 158 million. They had to buy them back. But they weren't under any pressure to buy them back. They could extend this as long as they want to. Today, or starting tomorrow, or by the end of the week, when this deal closes, the brokerage firm that put this deal together, the investment bankers in New York, and the shorters both now need to buy this stock. And we're talking about 270 million shares required to fulfill all of their obligations. The shorters need 158 million for their short sale, and the broker needs 110 million to complete the cap call transaction portion of this financing for the company. And those of us on the outside, we're going to know about it. As of this morning, as of right now, while I'm sitting here talking to you on this recording, most people do not understand what this cap call transaction actually means. They don't fully grasp the significance of this deal. If you want to know how well it can work out, check this chart out right here. This is Uber. This is a 1-year chart on Uber. And you can see here on the far left, that is March 2023. That's a year ago. Then there's April, May, June, July. And notice how the shares were in that well into the 22, 25, 20, 30 level until May. Then they got into the 35, 40 level until October, November. By November, when this deal was announced, the shares were in the low 40s. Stock was dropped from almost $50 a share in September down to the low 40s to put together a $1.7 billion cap call transaction. And since November of 2023, until now, look at that line all the way up to yesterday's high of 82.14. This stock goes up and down a buck or two every day, just like any other stock in this kind of level, and it is on its way to a higher level yet. This stock, in my humble opinion, I think Uber shares will break 100 in the next few months, and will go higher than that because this $1.7 billion deal is coming together. The cap call transaction is there, and I believe the brokers have been buying up Uber stock to deliver the shares to the company when the company decides to elect to exercise their call option. Sofi is going to be in the same boat with a power move, and I have a feeling that with 158 million shorted, there's already a group that'll desperately want in, and the broker will be coming in to mop up all the stock that's coming up for sale. We've traded over 100 million shares now for the day. Today, the volume of Sofi could well hit 130, 150 million shares. Tomorrow, if they come out with an increased allocation for this deal, with all the juicy numbers, we're going to find out, is the exercise of the stock at 975 or is it 1115? Is the cap call limited to $15 or is it limited to $18, $19? We're going to find out a whole bunch of information. At the end of the day, one thing, in my opinion, is certain. The stock is going to be a lot higher a couple of months from now than where it is now. I think in 3 to 4 months from now, we'll have the first quarter of profit results coming in. We're 2/3 of the way through the first quarter. The second quarter profits will be out. We're waiting for the third quarter financials, which will make the fourth quarter in a row that the company is profitable. Between now and at that point in time, shares won't be anywhere where we are now, and the company with 4 quarters of profits under its belt is S&P index eligible. And this changes everything. Now, every index fund will have to buy Sofi stock in their ETFs, their mutual funds, all these index funds around the world will need to buy SoFi stock. And I can tell you, I don't think it's going to be anywhere around 750 a share. Not going to be under 10, probably not under even 15. We're probably talking 15 to 25 as our new neighborhood, because we're dealing with a company that is making profits and, as of this week, just added $40 million to their bottom line profit number. That's what this deal is really all about. I'm Uncle Bruce. I'm live every day, 8:30 till 10:30 Eastern Time when the markets are open on this channel, Stock Markets with Bruce. Join me live, and I try to explain this market in plain English. If you want to make serious money in the markets, you're going to become an option writer. And if you want to learn how to become an option writer and make some dough like the institutions do, join me live every day, because I have classes and I do one-on-one consultations to get you into the profit seat and go from there. You want to quit your day job? You could become a full-time asset manager writing options and following stories like this. Thanks for joining me today. Hope it wasn't too complicated. I look forward to seeing you tomorrow, 8:30 Eastern. Come on around Monday to Friday. Thanks, everybody. See you later.